Filippo Lanza, portfolio manager at Invest Numen Credit Fund. Which was the biggest challenge in managing the fund in 2016?
In 2016, there were a few disappointments. I would say the biggest one was towards the end of the year with the failed recapitalization of Monte dei Paschi. That was quite unfortunate because we thought there was all the reasons and the conditions to make a private solution effective in terms of the recapitalization of the bank. Unfortunately, that recapitalization has been transformed into a state-supported recapitalization, which obviously has delayed the time frame of the successful recapitalization. We are still very confident that the recapitalization will now proceed as planned now with the new proposal supported by the European Commission, and we expect the shares to be assigned to us towards the end of April, May at the latest, and we think there is a decent chance of a very meaningful appreciation of our bonds, which now are effectively discounting 0.4 over book value valuation for the equity. We are quite confident, and so it was disappointing in terms of the time frame being diluted, but at the same time we think the end game will be the same and will be a very successful recapitalization, and will be probably one of the cleanest banks in Italy after the recapitalization.
You were expecting a bear market for fixed income since a few months ago. Finally, we are assisting to such trend since last October. Has the fund been taking advantage of this trend so far?
Yes, the fund we position is probably our strongest conviction at the moment in terms of the beginning of a bear market for fixed income. There are two main drivers for that. One driver is the sort of reflationary pressures, predominantly coming from the United States, with the labor market being under pressure, commodity repricing, and that obviously is pushing the interest rates going upward. The second big driver, which is mainly from Europe, is very fast increasing political risk, especially across France and Italy, with potential Euro breakup. Obviously, those two dynamics are compounding one each other, but they have very different kind of repercussions, whether you're looking at treasury pricing in US, whether you look at French government bonds. We are quite positioned both via option structure and credit default swaps, which should allow us to capture completely the combination of both the deterioration in credit risk due to political risk and at the same time the reflationary risk. And we think those trades will work very well during the second quarter, third quarter of this year.
Filippo, can you tell us how do you expect to make money in 2017?
There are going to be several drivers. I think we touch upon two. First of all, the banking restructuring that we see across Europe. We have several positions away from Monte dei Paschi, both in Italy, Portugal, and UK. There's going to be quite a varied kind of structures and trades we're going to have around those themes, but we think banks will definitely be a very positive contributor for the year. Secondly, we discuss on the beginning of the bear market for fixed income. We think it's going to be very interesting, and it's a very difficult trend to invest in from an investor point of view, and I think we are uniquely positioned. We always did very well during bear markets in fixed income, so we quite like the setting. We think volatility is on the rise for fixed income in general, and as I discussed before, we have several positions. Last but not least, there is a decent amount of corporate activity across the globe and in Europe as well. We've been very involved there in events and event-rich kind of transactions. We've seen recently the failed attempt on Unilever, as opposed to many other transactions that we've been involved, whether it's Rite Aid, Walgreens, whether it's Bayer trying to acquire Monsanto. And those transactions give a plethora of opportunity across the capital structure, both credit and equity. And again, those are something that we expect to be a very positive contributor for the year. So overall, we think the set of opportunities that we see is quite diversified and very, very interesting. And we have some super high conviction trades that we across all the different themes for the year.